Hello everyone, welcome to my channel. Today is 9th of April and we'll try to see some of the active setups today. So first example we'll look into Berger Pant, and today we'll try to learn a new indicator called Donchen channel. It is an indicator created by Richard Donchen based out of moving average, and there's upper band of the channel and lower band of the channel. As we see, the price stays inside that, so it generally helps to find the reversal. Like if it's making high and up around upper band, so it says okay, from this point the chances of going down is high, and there's a lower band where we see it from there the chances of going up is very high, and there's a median in between them. So whenever whoever creates these indicators, like they do a lot of research, on across the market. So like not only in American market, they may do the research in Japanese market, Korean market, some of the big market. At the same time, whenever these indicators are created, it's not just based out of stock. It's been created of many other instruments. Like it might have research on the gold, it might have research on some of the commodity, crude, and some of the other instrument. So before somebody created these kind of indicator, it has been very well researched. There might be many books and PhD done on these particular indicators. There'll be probability of success associated across the instrument. So like it might have high probability of success in gold, and it might have a high probability of success in some other instrument, or you can see that it may give a very good result in day chart, may not give a good result on the hourly chart. So all those research are done, and on the basis of these indicators are created. So I'll not get into further into indicator, but I'm just trying to say is they are very well researched, and then only they are created and applied. So okay, so let's take the example of Berger Pant, and then we applied Donchen, and on top of that we applied our trending line, the price action trend, and we clearly see this is our trend line. Okay, so this share have made Berger Pant have made October high of 850, came down again, made a high of 796, and third time it's made a high of 737. So this point of time, when we draw up our trend line, we see that there is a trend in place, and again this is a critical point. Okay, so if we started trading like 740 745, then the chances of going towards the previous point around 800 is very high. Okay, so if you are long side trader, you open a position around 745, or you buy in delivery and then couple of percent stop loss, and your price target goes as high as around 800 rupees. The other trade is, if it's not able to penetrate this particular line, it started coming down, then a couple of percent from this line, which is 745 or maybe 750, this becomes a stop, and then one can trade down at least till median. Okay, now understand the concept of median. There's a central line that is called median, which is 50% of between these two. So median will be somewhere around 700. So one can sort here with the target of at least 700, and then there's a possibility of testing a lower part of the band if the market turn negative, which is around 670 rupees. So that's how we get into two side of the trade, depend on which point the price penetrates. If it start going up, we'll go on the long side, and otherwise we'll go for the downside. Okay, I'll take another example with the same indicator. So now when we draw up our trend line, we clearly see the price was how much it made, 31,400, then nearly 29,700, then 27,000, another 10% down, and then as of now it's making 25,200. At the same time, at the lower side also, it's just not a continuous fall, it's a fall and then rise, and the fall and then rise. So this is this pattern is called a channel. Okay, so this is following a lower channel, or the say price is coming down but it's staying as a part in the inside the channel. Of course we applied Donchen also, but price action just says it's as a channel. So we see it's inside this channel, and from this point it made a reversal. So this is again a critical point. Okay, if it started trading above this line, so something around 25,500, and continuously stays above 25,500, then the possibility of going high like 27,500, which is around 7-8% from here, is very high. So again, two trade here. If you started about 25,500, then you buy here with the stop loss couple of percent below the trend line, so the stop loss becomes like 25,000. Okay, and the second trade is, this is a upper band of Donchen channel also. At the same time, this is a this is resistance from the price action point of view as well. So the better trade would be, one can wait for dip something around 22,900 or 23,000, and that is the price one can open long side trade, or one can buy on delivery and wait for a reversal. So this guy, if it comes here, so somewhere around 23,000 or below, this becomes a buy. Okay, another example, Marico Kaya. We see the green trend line, which is on upside, so which is a good sign, because okay, it was in downside for a few months, and then it started making upside. Okay, now where we from upside also it got a rejection from here, so the chances of coming down towards 470 is high. So one trade is, you will start here with the 2-3% stop loss for the 470. Other and better trade would be, one can wait and buy in delivery when it comes to 470 rupees, and keep few percent stop loss, 4-5%, and wait for a target of again like 500, 550. So the buying on the delivery on the high for the long side is a better trade once it comes down to 470. Okay, we'll take another example of SBI card. There are 2-3 patterns here. The first is triple top. If you see, SBI is here around this date, like I think September, it made a top of 1160. Then you see in October it made another top of 1160. Yeah, exactly 1160, and here it made another top of 1157, and during this time here in October, it's almost was in the range where it was trying to test 1160 for almost 8 to 10 times, and it could not. And from this point in October, the correction started, and it was in the lower top and lower bottom. If you draw price action line, this line in the upper line in the lower line, so it was in this particular channel, it was more or less in this channel, and then it made a breakout here. So this is a point, somewhere around here, and March mid, where it confirmed a breakout. So somewhere around 800 rupees this becomes a buy with a few percent of stop loss. Still it's in the buy range, because it's still in the channel, this particular channel. So somewhere below the channel around 800, 820, it becomes a buy with few percent stop loss, 2-3% stop loss, and then we can have a target of 880, 890, and once it crosses that, then we'll have a next target around 930, 940. Another example, ICICI Lombard. We see here, this is a clear trend line, and this point of time it's broken the trend and started going high. So somewhere around here 1330, or when the trend line comes down here, this point, that also comes to be 1330. So somewhere around 1330 or 1320 it becomes buy with 2-3% stop loss, and then we can see a target of 1400 and then 1450. So these are the target looks like. But this is not a point to enter. We have to wait because it's at the same time it's hitting on the top end of the don't change channel also. So it may be that you buy here and it started coming down, it will come down 4-5% and you will stop out. So it's better you let it correct for 4-5% and then you buy with a 2-3% stop. Okay, now we'll take the example of Nifty. Okay, this we predicted few times, so we'll see the reversal. It happened on the Friday. So we were predicting, we predicted here on this date that from this point it will come down, and it will come down till 17,550 or 580 I told. But now you see, yesterday it made a bottom around 17,600. So when we say 17,550 or 580, that was a support at that point of time, but this is a dynamic support. Now you understand the concept of there is a static support and there is a dynamic support. Dynamic support is support that will change with the time. So today the support may looks like I mean, if you are trying to understand dynamic support, it's like that. It's on the based on the time as of now. So yesterday your dynamic support might be what, 17,550. Today your dynamic support might be 17,600. Tomorrow your dynamic support might be 17,620. So your dynamic support also will change with the time to time. So even if you are playing, you cannot have a static stop or a static target, because the target and stop will also change with the time to time. Okay, once we learn the deeper concept, you will understand how this dynamic support works, because these are the time sensitive instruments. So support is not a static value that will fix all the time. It is a value that will change with the time. Okay, so yeah, that's all for today guys. Thank you.